Hi, welcome. Today we're going to have a look at ARM Holdings. The stock has gone up by quite a lot, but it's kind of trading and drifting sideways at the moment. So let us use technical analysis and see what is happening to the stock and where it's likely to go. Without further ado, let's look at the daily chart. We always start with the daily chart. This stock started here and it drifted sideways, and then after that it started to have this 20 MA and 50 MA. We can see the 20 MA going above the 50 MA, and that's where the stock started to move up. Okay, from around 57 it went all the way up to 162. That's about almost 300%, 3 times in a very short period of time. And no doubt this stock is in the radar of many traders and many investors, because who knows, it might go up to 300 and so on. So let me just go to TipRanks and let's seek the advice of various experts. So what I'd like to do is go to TipRanks and key in the symbol ARMS, and then you click on here, Analyst Forecast. So this is the collective wisdom of people who have done a lot of research. They're very smart. Okay, and let's take a look at what they think of it. So there are 17 ratings, moderate buy, 11 buys, 5 hold, 1 sell. Not too bad. What I like to see is like usually 20 buys and maybe 2 holds and no sell. Okay, but they give us a 12-month forecast of 160, average of 105 and 72. So what is the current price right now? It's 126.97. Okay. Sorry, and the high is 160, average is 105. Okay, so that means despite the average price, there are people who think that it's going to go up 160. Of course, the target has been met. Now, this stock broke out of maybe we can say an ascending triangle pattern. Okay, for those who follow continuation patterns, the ascending triangle is a continuation pattern. Why? Because it moved up here and then it broke out. The ideal place to enter is as it breaks up, but because there was such a large gap, okay, it's not so ideal. But even if you enter here, put a stop loss around here or here, you would still have made quite a lot of returns in just 2 days. And you can see that the stock had a very heavy volume during the breakout day. The second day also heavy volume compared to the volumes here. And the third day, there's a very heavy volume, about 100 over million. Second day was about, let me just move myself here, 40 over million shares, and here about 100 million shares. So definitely the buying power is about 250 million shares when the stock going up. And whenever you see the stock going up so rapidly during the up days, you want to see the volume is huge. Okay, there's huge volume here. Okay, and during the sideways trading days, you want to see the volume actually taper off or go down. Can you see the volume very high here, and as the days go by, the volume diminishes. Now, this kind of gives us a bit of hint of what might happen to the stock. So you see, if the stock goes up on very high volume and it trades sideways on very low or declining volume, that means that tells us that buyers are interested. Not many people are selling. And if you look at the classic continuation pattern of stocks that continue to go up, you will see that volume is very heavy during the breakout. When there's sideways consolidation, volume declines. So this is a very good sign for ARM Holdings. Okay, I currently don't see any continuation pattern yet. Okay, it's not like it's making a very nice triangle pattern. I don't know if you could connect, some of this here to get a triangle. Maybe not. Okay, maybe not. But definitely not a very clean triangle pattern. But what it tells us at this moment is that it's trading sideways. Okay, you don't need to worry too much about the stock at this moment because it's just trading sideways. There's a very wide range. Okay, let's go to a weekly chart to see if there is something we can learn from it. So hold on, my internet connection is very slow. Okay, now maybe not much to be learned. Let's go to 60-minute chart. Okay, the 60-minute chart helps to break things into a manageable for us. Now, the support area you want to look at is this area. Okay, this is a support area you want to look at. Why? Because it made a higher decline, then it overcome these highs. When a old high is overcome, the area becomes a new support, which is why you see when it went up, it declined. It didn't go below this area because it was able to find support. Then it go back up, it dropped. Also didn't drop below because it was able to find support at the previous high. Now support is an area, not a definite point. And as it trades ups and down, you can see that it also formed a bottoming tail here, go back up. You can see that this area is an important support area. So for those who are holding on to the stock, you want to pay attention to this area very carefully. Okay, if ARM is alright, for those of you who are holding this stock longer term, pay attention to this support area. Now, as long as this stock stays above this area, you want to be bullish bias because most likely it will just break out higher in the future. Now, the other clue you want to look at is the 60-minute 200 MA. The 60-minute 200 MA is a very important moving average. This yellow line is a 200 MA. Okay, if you can see it right now, it's sitting there, and if it's able to find support, right, at this 200 MA, most likely it's gonna go up higher. Okay, maybe you can draw a downtrend line. Trend lines are actually very useful. You can draw a trend line and see if you can break above this downtrend line as well. So at this moment, this will be the line in the sand, and you want to watch it very carefully. So hopefully they find support here, and then if it breaks the downtrend line, you might just shoot off higher from there. Okay, so that's all for today. I hope this analysis is helpful to you. If you learned something, it's been helpful to you, do like my video and subscribe to my channel for more analysis like this in the future, and see you in the next one.